Hey guys, this is Emily Lopez, and today I want to talk about financing your flip or financing your rental property. This is the hugest hurdle you have to get over to start investing in real estate, and people are always trying to find what the best option is to get them started. There's websites devoted to it, there's blogs devoted to it, and it just seems so difficult to get started. And it's actually the most common question I get from people that send me messages on Instagram or clients that want to get into investing. How do I get started and how do I find that money? So the best answer is the one that we most always don't have access to is you have the cash and you can buy a property in cash, but most of us are not able to do that. So actually how I got started is the first property I bought that now has become my first rental property when I moved out of it was I lived in it. So there's a couple options you have. And if you can stand to live in it, that's your best case scenario because you can do a loan and you're not going to have to put as much money down if you're going to occupy that home. And every loan's a little bit different about how long you have to live in it before you can rent it out or before you can sell it, if that's your goal. But if you can owner occupy that property, you could start with a conventional loan. With a conventional loan, you can put as little as 3% down and you can live in it, fix it up, increase your value, and then you could either sell that once you fix it up or keep it as a rental property and you only put 3% down on that home. The other option you have is an FHA loan, which is a government-backed loan, but you can do an FHA loan with 3.5% down as long as you live in it. And you can do a conventional or an FHA loan that has up to 4 units if you own or occupy one of the units. So you could buy a 4-plex, live in one of the units, rent out the other ones, save up that money, and then go to buy your next property and then rent out the unit that you had lived in, and that's a great option. You also can do that with a VA loan. A VA loan is available for veterans that have served our country, and the same thing, it's actually a no money down loan, but you can do up to 4 units as long as you live in one of those units. And then once you move on, if you wanted to use your VA loan on another home in the future, you would have to refinance, so then you could use that VA entitlement on a separate home, so you would have to own or occupy. But you can own or occupy and put little to no money down with an FHA loan, a conventional loan, or a VA loan. Another option is a 203K loan. So what a 203K loan is a rehab loan. There's also 203B loans. These are FHA loans. They're for owner occupants, but if you buy a property that is considered not financeable. So a lot of times when we buy flips or when we buy investment properties, these are properties that are in really bad shape. So they are not going to be loanable with traditional financing. So that would mean these are rehab loans. When you hear people talk about a rehab loan, that there are repairs that need to be made for a bank to be willing to loan on them, and they're not willing to loan on them in their current condition. So you can borrow part of the money for the rehab of the property to get it up into the condition that it needs to be in, and they'll loan you for the rehab, and then they'll come back and make sure you got it in financeable condition. They'll reappraise once you've completed the rehab to make sure that it's up to the standard it needs to be in. And there's a lot of paperwork, but these are for owner occupants that are going to fix up a home they plan to live in. Again, there's going to be a requirement for how long you have to live there before then you could go and sell that property, but it's a great option. Now, if you just say, you know what, no matter what, I'm not going to live in a property while I fix it up, I just can't, it doesn't work with my lifestyle, then you're going to have to put 20, 25, depending on your lender, % down on that property if you're not going to own or occupy that home. Now, another option if you're not going to occupy a home and it's really, really bad shape and it needs just completely fixed up and it's not inhabitable is a hard money loan. These are a lot riskier. This is where you're actually buying money and the home is collateral, so if you don't pay the loan, then they're going to take the home and repossess it like with any loan. But these loans are going to be like 10, 12% interest. So you're probably going to want to get it to the condition it needs to be in and sell it quickly or refinance it to a better interest rate. So these, you don't want to have a hard money loan if you're going to take forever and ever and ever to sell it or to get it in the condition it needs to be in, because these are super, super high interest rates. And so they're really scary for first-time investors. But if it's your only option, that's okay. Just make sure that you're going to get what you need to get done on the property quickly so you can sell it or refinance it. There's some banks that will do in-house loans if you have a history with that bank and they know that you are going to pay back the money if you have a good credit score, and they will loan you on a property that is not financeable That means maybe the roof's in really bad shape, maybe there's a lot of peeling paint, maybe the utilities aren't functioning. They're gonna do an in-house loan, but you have to have that lending history with the bank or good credit scores, or they need to see you have that money in your account that they trust that you're gonna be good for it. And so those are not gonna be as common until you've established a relationship with that bank or that lender. So I would always recommend, if you wanna get into investing in rental property or in flipping, your best bet is to get a loan where you can live in the property while you fix it up and then move on once it's in the condition it needs to be in. This is just kind of a really, really quick overview of some options for you. I'll do videos as we move along going into details on these different loan types and how they work for just buyers in general and how they work for investors, and we'll get you more details. But this is a quick rundown, and I hope it was helpful to get you started. So when you go talk to your lender about what your options are as an investor, you kind of know some of the loan types, some of the parameters with those loan types, and it just gives you a real general basis. I hope this was helpful, and I hope this can help you get you started. Please like, subscribe, and follow, and let me know what you want to see next.